Hello everyone and welcome to StudyIQ English. I am Joy and in this video we are going to discuss about P notes or participatory notes. Let's get started. Before we understand what is P notes, we need to understand little bit about foreign investment in India. We know that foreign investment is the investment that comes from rest of the world to the domestic territory. That is a foreign investment. And the foreign investment can be either direct or indirect. The direct foreign investment is known as FDI or foreign direct investment, whereas if it's through indirect sources, then it is called foreign institutional investment or foreign portfolio investment. Now, what is a foreign direct investment? Foreign direct investment means a foreign entity, a company or an individual is investing in the domestic economy, that is in any of the entities or any of the business units in the domestic economy, and this is direct. So Sebi, that is the Securities and Exchange Board of India, has tight requirements for obtaining permission and documentation. So we can say that foreign direct investment is not very easy. It requires some processes to be completed. There are some requirements and mandates given by the Sebi, Securities and Exchange Board of India. Next is foreign institutional investment. Foreign institutional investment is a kind of indirect investment. Here the investor makes investment in an Indian company through stock exchange. That is, by registering itself in the stock exchange with the Sebi. The company or the entity who wants to make investments in India has to register itself with the Securities and Exchange Board of India and makes investment through stock exchanges. So here regulations are less. There is quick money entering the Indian stock market for a short period of time. But there are some limitations because these are investments made in the shares of the company. Therefore, it's highly liquid or highly volatile. So the volatility, the nature of investments are highly volatile. Foreign institutional investors are those who invest in assets that are located in a nation other than where they are registered or where their businesses are located. So that is foreign institutional investment. Now, see, we have seen what is a foreign direct investment. It is where the investor makes direct investments in a company. Institutional investment is where the investor registers himself with the Sebi, Securities and Exchange Board of India, and makes the investment through stock exchange. That is foreign institutional investment. Now we need to understand what are participatory notes. P notes or participatory notes. These are overseas derivative instruments. What is meant by derivative instrument? Derivative instruments are kind of debt instruments. So they are debt instruments, but the name derivatives. How do they get the name derivatives? It's because they derive their value from the underlying asset. That's how they are known as derivatives, because their value is derived from the underlying asset. So that's derivatives. Overseas derivative instruments with Indian stocks as underlying assets that allow foreign investors to invest in Indian stock exchanges without having to register with Sebi. This is the most important point. We have seen that if a foreign investor wants to register in stocks or the shares of Indian companies through foreign institutional investment, through FII, the investor has to get himself or herself registered with the Securities and Exchange Board of India, that is Sebi. Now, without registering with Sebi, that is without being registered at the Sebi, that is with the regulator, foreign investors can make investments in India. How? That is through participatory notes. So participatory notes are those financial instruments or derivatives instruments that allows the investors to make investment without having registered in the Sebi, that is the Securities and Exchange Board of India. These are not traded on Indian stock exchanges, but they are sold in a directory of foreign investors who purchase them through the FII to dodge taxes and regulations. So we can say that P notes, participatory notes, are those financial instruments that allow foreign investors to invest in an Indian company without having registered with the Sebi and also without making foreign direct investment. It's the easiest way through which the foreign investors can make investments in the country, and even without registering with the regulatory authority, that is the Sebi. So that is P notes or participatory notes. Now let's see how does the P notes work. Now the investor can deposit in the registered FII. Now, what is the significance of this registered FII? The P notes are issued by registered FII. That is, those foreign institutional investors who have registered with the Sebi as stock brokers can issue these participatory notes. So, the investors can deposit their investment with those foreign institutional investors who have registered with the Sebi as stock brokers. So, these stock brokers who have registered with the Sebi as FII can issue P notes to the investors. They can issue P notes. So, this allows the investors to purchase appropriate quantities of stock and equity. The bank is then notified, that is the registered FII, the bank is then notified of the Indian security or securities that the investors desire to purchase. I'll explain it in very simple language. That is, if a foreign investor wants to invest in the shares of Indian company, there are two options. One is FDI, foreign direct investment. Another one is FII. Foreign direct investment is not very easy. There are some regulations and mandates. Whereas foreign institutional investment, when it comes to FII, again registering with the Sebi as a stockbroker is mandatory. So both have their own complications. Now, an investor who doesn't want to take up all these complications but just want to invest in the Indian company, they can invest it through P notes, participatory notes. Now, what are P notes? Participatory notes are those financial instruments, derivative instruments issued by those FIIs who are already registered with the Sebi as a stockbroker. So, using this P notes, the investor can invest in Indian company. Now, dividends, capital gains and any other payouts due to stockholders owing shares in the Indian firm are available to the investor. That is dividends. Dividend is the share of profit of a company. How much ever is your share in a company, the proportionate share of profit of that company is your dividend. Then capital gains and any other payouts due to stockholders owing shares in the Indian firm. These are available to the investor in case of the P notes also. That is, if an investor makes investment in the form of P notes, then also he is eligible for dividend, capital gains and other payouts. The FII reports of all its issuances to Indian regulators every quarter, but it is required by law not to reveal the identity of the real investor. Now, this is important because one of the limitations of P notes is also the anonymity of the investor. That is, who is the investor? The real name of the investor or identity of the investor is not revealed. So, it leads to anonymity. So, that is again one of the drawbacks of P notes. Let's see what are the positives and the negatives of participatory notes. One is anonymity for the investor. The investor who doesn't want to reveal the identity can very well do that through purchase of the P notes. Second is ease of saving. Third is tax saving. These are the pros of P notes for the investor. Now, coming to the cons or the negative sides of it. There are ethical problems like terror funding. It affects the stock markets adversely. It can lead to money laundering. These are all because of the anonymity. Anonymity of the investor. Now, let's see what were the steps taken by Sebi to regulate participatory notes. So, in 2007, Sebi issued regulations according to which FII cannot issue fresh participatory notes and the existing participatory notes would have to be wound up in the next 18 months. In 2011, required the FII to follow KYC norms, that is know your customer norms, and had to submit the details of transactions, and this caused a decline in the issuance of participatory notes, because one of the major attractions of participatory notes is that the investor can invest without revealing the identity. So, because Sebi asked to follow the KYC, the investment under the P notes also reduced. In 2014, Sebi banned unregulated entities in foreign countries from subscribing to participatory notes. So, Sebi banned unregulated entities in foreign countries from subscribing to P notes. In 2016, Sebi mandated that in addition to KYC norms, the anti-money laundering rules will be applicable to the participatory note holders. SEBI also issued norms on the transferability of participatory notes between two overseas investors and increase the frequency of submitting the report. All these were done in order to improve the transparency. In 2017, SEBI banned foreign portfolio investors from issuing participatory notes for investors in equity derivatives. 2017, in another move by the regulator SEBI to stop round tripping and money laundering, the non-resident Indians as well as residents were banned from investing in participatory notes. Now this is a question, model questions relating to P notes. First one is asked in 2019 by UPSC in the prelims examination. Which of the following is issued by registered foreign portfolio investors to overseas investors who want to be a part of Indian stock market without registering themselves directly? Answer is P note. It's a direct question. So this is a definition for P note. Which of the following is issued by registered foreign portfolio investor? That is, only those FPI or FII who are registered with the SEBI as stockbroker can issue participatory note. To overseas investors who want to be a part of Indian stock market but without registering themselves directly. That is participatory notes. Which of the following can issue participatory note? This is regarding who can issue participatory note. Options: foreign portfolio investor, RBI, SEBI, commercial banks. We know that it is issued by foreign portfolio investor. So answer is A. So these are two questions related to participatory notes. I hope participatory notes are clear for you. The concept is clear for you. Thank you so much for watching. I wish you all the very best.